In today's video, I'll show you my secret process to find the best stocks to day trade and the system I have in place to filter out the bad stocks and focus on the ones with the highest profit potential. First, you want to look for stocks that are liquid. This means that there are a lot of buyers and sellers in the market, which makes it easier to enter and exit trades without affecting the price too much. Also, you want to focus on stocks that are volatile. A stock that moves a lot in price throughout the day gives you more chances to buy low and sell high. Another important factor to consider is the overall market trend. You want to trade stocks that are moving in the same direction as the overall market. So when the market is bullish, you want to trade stocks that are showing strength. Now let's get specific. Here are the exact filters that I always use in Finviz Screener. Average volume is perhaps the most important filter for finding liquid stocks. Average volume refers to the number of shares traded on average each day. The higher the volume, the more liquid the stock is likely to be. I usually set this filter to over 1 million shares to ensure that there are enough buyers and sellers in the market. The more shares that are being traded each day, the easier it is to enter and exit positions without causing a major impact on the price. While not directly related to liquidity, the price of a stock can also impact how easily you can trade it. I generally recommend setting the price filter to over $30 to avoid stocks that are too cheap and may not have enough volume. Setting the price filter to over $30 can be a good way to ensure that you're trading stocks with adequate liquidity. These stocks tend to attract more institutional investors and large traders. I try to avoid lower price stocks because they often have smaller market capitalizations and fewer shares outstanding, which can make them more susceptible to big price swings and manipulation. Another important filter you must use is the relative volume. Relative volume compares the current trading volume of a stock to its average volume over a specific period, typically the past 30 trading days. When a stock is trading at a higher volume than usual, it tells us that there's increased interest and activity around that stock. And when there's increased interest in a stock, there's often a greater potential for significant price action. I recommend setting the relative volume filter to over 1 when looking for stocks to day trade or scalp. A relative volume of 1 means that the stock is trading at its average volume. Also, if you want to be more aggressive, you could set the relative volume filter to over 2. A relative volume above 2 indicates that the stock is trading at more than twice its normal volume, which is a strong signal of increased market interest and potential for significant price action. As short-term traders, we are looking for stocks that can make big moves in a short period of time. We want to get in, ride the momentum, and get out with a quick profit. And stocks with a high beta are more likely to give us those opportunities. Beta is a measure of a stock's volatility in relation to the overall market, as represented by the S&P 500 index. Essentially, it quantifies how sensitive a stock is to broad market swings. Now, the market beta baseline is 1, so stocks with a beta above 1 tend to be more volatile than the general market, while stocks with a beta below 1 tend to be less volatile. By screening specifically for stocks with a beta higher than 1, we focus on names that historically demonstrate above average volatility compared to the market. A beta of 1.5, for example, means that the stock is 50% more volatile than the market. So if the market moves up 1%, the stock should theoretically move up 1.5%. By setting the beta filter to over 1, you can quickly narrow down your list of potential trades to only the most volatile names. Depending on market conditions and your strategy, you might set the filter to over 1.5 or even over 2. I also set the market cap filter to over $1 billion. This way, we can quickly narrow down our list of potential trades to only the most established and actively traded names. When we're talking about stocks with a market cap over $1 billion, we're talking about the big leagues. These are the companies that have the attention of the major players on Wall Street. Stocks with a market cap over $1 billion also tend to be more stable and less prone to manipulation. These are established companies with solid fundamentals and a track record of success. The average true range is one of my favorite indicators for measuring volatility and potential profit opportunities. In simple terms, ATR measures the average range of a stock's price movement over a given period of time, typically 14 days. When a stock has a high ATR, it means that it's experiencing significant price swings on a regular basis. The price is moving up and down more dramatically than a stock with a lower ATR. I like to set the ATR filter on Finviz to over 1. This helps me quickly identify stocks that are experiencing a high level of volatility and potential for significant price movement. And that's exactly what we want to see as day traders, stocks that are making big moves and creating opportunities. The size of a stock's float can also have a big impact on its volatility and liquidity. When we talk about a stock's float, we are talking about the number of shares that are actually available for trading on the open market. That's why I usually recommend setting the float filter to over 10 million when scanning for potential trades. This helps to ensure that there are enough shares available for trading and that the stock is less likely to experience sudden, erratic price swings. The 50-day simple moving average is my go-to indicator to get a more complete picture of a stock's trend. You can also use the 20-day moving average as an additional filter. The 20-day SMA is a shorter-term indicator that's more sensitive to recent price action. It's great for identifying potential trend changes in the near term. The 50-day SMA is a longer-term indicator that's less sensitive to short-term price fluctuations. It takes more time to change course, but when it does, it can be a powerful signal of a more significant trend change. If a stock is trading above both the 20-day and 50-day SMA, that's a strong sign that it's in a well-established uptrend. The shorter-term and longer-term trends are aligned, and the stock has a lot of bullish momentum behind it. An up gap occurs when a stock opens significantly higher than its previous day's close. Gaps are often a sign of strong momentum and sentiment in a particular direction. When a stock gaps up, it means that there was a lot of buying pressure and demand for that stock in the pre-market or after-hours trading sessions. This is why I love to use the gap up over 1% filter when I'm scanning for potential momentum trades. By looking for stocks that have gapped up by more than 1%, I can quickly identify names that are experiencing significant overnight moves and that may be poised for continued momentum in the same direction. For example, if a stock gaps up on high volume and with a wide range, that's often a sign of strong bullish momentum that could continue throughout the trading day. Combined with the previous filter, the 50-day moving average, if the broader market is in an uptrend and experiencing positive sentiment, that may provide a tailwind for stocks that gap up and increase the likelihood of continued momentum. The 52-week high-low filter is a powerful tool for identifying stocks that are trading near their highest levels in the past year and that may be poised for a breakout or continuation move. These are the highest and lowest prices that a stock has traded at over the past year or 52 weeks. They represent the extremes of a stock's price range during that time period and can provide important context for its current price action. I like to use the 0%, 10% below high filter And we're looking for stocks that are trading within 10% of their 52-week high price. In other words, we want to find stocks that are close to breaking out to new highs, but haven't quite gotten there yet. When a stock is trading near its 52-week high, it means that there is a lot of bullish sentiment and momentum behind it. And by focusing on stocks that are very close to making new highs, you will easily identify names that may be on the verge of a big move higher. By combining these 10 filters, you're essentially creating a powerful system that identifies the most promising stocks for day trading. Remember, the market is always changing, and you'll need to be flexible in your approach. There may be times when applying all these filters will result in a very small list of stocks, or even no stocks at all. In these situations, it's okay to adjust slightly the strategy and loosen some of the filters to widen your pool of potential trades. For example, if you're left with only several stocks to choose from, skip the gap up filter or adjust the 52-week high-low one. This will expand your list to include more potential stocks to day trade. By using this comprehensive set of filters, you're putting the odds in your favor and giving yourself the best possible chance to find the stocks with the highest profit potential. And now, it's time to trade them. These videos will show you my favorite day trading strategies.